So one of the things in the market that really frustrates me is 99% of all the business owners in the world only try to scale their business organically. They don't try to scale their business through acquisition. I don't know whether they're afraid of it or they don't understand it, but in this video, I'm going to break down exactly why you should do it and what the benefits of bolt-on acquisitions are for you to grow your existing business. If you don't know me, my name's Carl Allen. I've been buying and selling businesses now for over 33 years. I've done $48 billion worth of transactions, and I'm here to teach you some really useful tips on how to scale your existing business through acquisition. So all the big guys in the marketplace, Amazon, Facebook, Microsoft, they all grow through acquisition. So if you're an existing business and you want to scale, everything that you need to scale your business, you can buy through acquisition and you can use other people's capital to do it. So if you want more revenue, go and acquire it. You want more profitability, go and acquire it. You want new products, new services, you want new customers, you want more vendors, you want new technology, new locations, you can go and acquire all of those assets and all of those things through acquiring other businesses that already have the things that you don't have. So take Amazon, for example, right? Amazon's acquired 117 businesses in the last 25 years. A big portion of its $2 trillion market cap has come from the bolt-on acquisitions that it's made. And once you've done a few bolt-on acquisitions, you're then classified as a roll-up, where you're acquiring lots of different businesses in a particular sector to get a lot bigger. Imagine Jeff Bezos at Amazon all those years ago when he was sat in his office and one of his team came in and said, Jeff, we got a major problem in our market. There's this new company that's come out called Audible, and it allows people to listen to books while they're working out, while they're in the gym, while they're driving the car, while they're walking the dog. No one's going to be buying our books anymore, Jeff. What are we going to do about it? So did Bezos think, well, let's get the tech team in here. Let's figure out how to code a new application then. Let's get the marketers here and let's figure out how do we market this? How do we push it out into the marketplace? No, he went and he bought Audible and he plugged it into the business. Many years later, he realized that streaming video, streaming movies, streaming TV shows was going to be a next big play for Amazon to grow revenue and grow profit. Did he figure out, let me call all the film studios, let me get all the TV companies on the line, let's cut some royalty deals, let's figure out how to build the technology? No, he went and bought a company called LoveFilm, which was the junior competitor at the time to Netflix, right? He went and bought LoveFilm, and LoveFilm is now Amazon Prime. He paid $300 million to buy LoveFilm. Amazon Prime last year did $31 billion of revenue. And then one of Amazon's largest acquisitions was Whole Foods. He realized that grocery retail online was going to be the next big frontier of e-commerce. He didn't go and build a grocery store. He didn't call Heinz and Pepsi and Dr. Pepper and say, guys, sell us some of your stuff, we're going to build a supermarket. No, he went and bought a grocery chain. He went and bought Whole Foods and he integrated it into the Amazon footprint. So all the big guys are doing that. Facebook bought Instagram, Facebook bought WhatsApp because they didn't have the time to build that technology and build that customer base themselves. Microsoft's bought 300 businesses in the last 35 years. They bought Activision to get into the gaming market. They bought Navision and Great Plains. I actually worked on those deals back in my Wall Street days so Microsoft could get into the enterprise software market. They bought LinkedIn because they wanted all the eyeballs of the LinkedIn memberships so they could sell them all the Microsoft catalogs of products. So all the big guys, all the massive public companies, they're acquiring other businesses to scale market share, revenue, cash flow, to scale customers, to scale employees. That's what they're doing, and we can do the same with small business acquisitions by buying businesses worth between $1 and $10 million. So if you found this training interesting, click on the link below. I got some free training for you. It's completely on me, where I'll go into this in a lot more detail. I will see you there. Until then, bye for now.